working. Hello, good afternoon, ladies and gentlemen. Thank you for staying. I know we had some nice lunch, and then we had some mentalist. I don't know if you're still here. Zhao? No? I think it was an amazing act that he pulled with ChatGPT and blockchain. And now we're moving to the emerging of decentralized finance as in DeFi and its influence on the centralized finance, CeFi. We have beautiful panelists joining us today, each from his own background and information and much wealth of experience. So, Amalia, please introduce yourself so that we can continue.
My name is Amalia Grochal. I am the founder of MIRAI, the private fund, as well as I am a member of the Ordinals Council. As a fund, we invest in tokens pre-TGE, mostly obviously into DeFi, as this is our topic today. And as a member of the Ordinals Council, we're working on rolling up the necessary infrastructure for the DeFi, obviously, on the Bitcoin network.
Thank you.
Good afternoon. My name is Herve Francois. I work for Investcorp for 1 year now. Investcorp is one of the leading alternative asset manager in the region, and I more specifically lead the blockchain fund. Before that, I worked some 20 years in the investment banking industry and around 8 years on digital assets. Thank you.
Thank you, Gourav.
Yeah, good afternoon to all of you. My name is Gourav Sharma, CTO of Minati project. And in the past 2 months, Minati project launches our own metaverse. So DeFi was the biggest role in the metaverse. So today we will discuss about the DeFi projects.
Thank you, Gourav. Claude.
Hello, I'm Claude. I'm building stablecoins in the DeFi world. And we are doing tokenization of real-world assets like in a way that is usable in DeFi. So that's what we're doing. The name of the company is called Mimo Capital, and our protocols are the Parallel Protocol for stablecoins and the Kuma Protocol for decentralized tokenization of real-world assets.
Thank you, Claude. Last but not least, today we're joined by 2 ladies, and this is rarely it happened. So,
is it better?
Better.
Okay, thank you. Thank you for the support, guys. So, if you were here before, probably you heard my presentation. I run 2 companies. One is an investment platform, something like a Shark Tank, but on steroids, that allows people from the audience to invest in highly vetted, high-growth potential companies with potential to become unicorns, called Unicorn Hunters. And also, I'm the founder and president and chair of the board of Unicoin. It's a tokenized security that is backed by $1 billion in real estate assets. And we also have as backing high-growth company, stakes in high-growth companies. And we are SEC regulated and a public reporting company. I'm super happy to be here with this fantastic panel.
Thank you all. I've been into the centralized finance for around 20 years in my life. And I've seen how it works. I know how the regulation, I know how slow it is, but it is what it is. And then when I got introduced 7 years ago to the world of, started of course into the trading, but then into the blockchain itself and the technology, this is when we discovered that there's much more. And then that's what we need for the next gen world or the future world, because things are really moving super fast. And for us to capitalize on the digital transformation journeys and the future of how future cities, smart cities, and all of this, you need new elements, you need new ways, new transactions, new things we didn't have. And this is how blockchain can facilitate all of this using the decentralized finance. And we'll start with the first question to all. In what ways DeFi is really influencing traditional finance as per our panel? And how do you really envision this broader financial industry adapting these changes and knowing what's happening and how they are taking it into consideration? Is it slow, the regulation and all of this, and how we can bridge them into the world of DeFi? Amalia.
So obviously everything is going very slow, but at the same time we see all of the big brands of the tier one banks, even in US, rush in to get the full neobank license, which is the mix of crypto and fiat banking. That means that as soon as regulations are more certain, they're ready to go. They already have the setup, and we don't necessarily know about it yet, but they are ready to go. And I think it's very interesting to take a look at NFTs as an entry to a financial product, right? Because we all see those crazy JPEGs of monkeys, but we don't necessarily know what does that mean. Okay, there is some rarity, it's a collectible, but what else could it give us? It could give us an entry to a financial product, to a collateralized loan, to fractionalized loan, to liquidity farming. We can do many different things with an NFT, especially if it represents a part of commodity, security, or anything else. It could be a real-world asset. It could be an asset that is listed on NASDAQ, right? So that's something that it would be very, very interesting, and definitely banks will have, so to say, fun with it, because what is very beautiful about blockchain that you have data finality. So it's very, very hard to falsify anything or very hard to run the same transaction twice. So for the banks, in the end of the day, once regulations are more clear, it would be easier to work, because now they're working twice on the same, and then they only have to do half of the work.
Before I jump to Herve, anybody coming from the centralized finance world, just as a show of hands, just to see? All right, thank you. Please.
Yeah, just to add on this, I think there is not any financial services which is not under like a DeFi format right now. So from anything you may think about lending, brokerage, literally everything, payment are on the DeFi format. So for the bank, it's the same approach that we had it in the past between banks and fintech. I mean, a source of inspiration. So they can look at it, how they can revamp the system in terms of cost cutting, for instance, make it more efficient, in terms of removing some intermediaries as well. So all the typical benefits from blockchain, which are translated into decentralized finance, does apply. And on top of this, you also can create like a new business model that become attractive for the bank as a diversification. But on a last comment, and we may come back to this, it's difficult for banks to use it as it is right now, because the approach of anyone, anywhere, anytime just doesn't work the same way for the banks. Right. So they need to put like an identity layer, the KYC does matter for banks. So the shortcut that did decentralized finance to innovate in a faster manner need to be adapted for banks. But definitely you will see them reusing it in the coming years.
Thank you. Gourav?
Yeah, the D5 has playing an important role, of course, in the financial industry. So I just give one statement. If you imagine that before the 5 years, I cannot hear the name or any summit about the Defi. That's the power of Defi, that we have a session about 45 minutes. That's the power of Defi. So this is the Defi. And of course, the Defi has been proven. He is the king of the financial industry, because you know about the financial or the recession situation to the worldwide, or today we have listened the news about the many circumstances were happening in the world. But the Defi has proven it that he should be a main important role in our financial industry. Or as you know about the country diplomatic relations should be like are shuffle, but the Defi has to be proven to make an industry reuseful, or of course renew our many lives because of Defi. So I think all cooperative banks and like MNCs will adopt the Defi, because Defi has to be proven. This is the king of financial world.
Thank you. Claude, same thing, but is Mimo solving anything in this space?
Well, I mean, we have a very specific take on what we're considering to be important in DeFi and CeFi, because we're kind of at the border of the two. Like on DeFi, our goal is to see DeFi as, say, institutions where instead of who you are being like the gate of who can use the services, it's what you own that is the gate to use the service. So like whoever can use pretty much any DeFi service as long as they own whatever is accepted by that service. And like from this type of philosophy, we're like, okay, well, if who people are does not really matter, but whatever they own does matter, then we can look into which type of services we can build. And the first thing that we built was stablecoins for, say, euro and stuff like that, like, because we realized that, well, anybody should be able to mint a stablecoin, and if really everybody's building services based on whatever people own, then it's just about designing for collateral. It changes your entire way of seeing risk management, because you don't look at the people anymore. You look purely at what they own, and like you set rules of like about what people can do, like they need to repay their loan at time X. They need to repay when the price does Y or something like that. Like it's really purely like a very strong removal of essentially a very strong removal of the people behind. And by removing the importance of people, you actually open to more people, because then you don't need to look who they are, so then everybody can come. And this is the thing, like most people in the industry are solving this problem, us too, but where we are special is that on the other side of a protocol where we're part of the people who govern, we own a company that is fully regulated, and this company looks at who people are and stuff like that, but what we do is slightly different. We are a company that has we're a regulated exchange and we're a regulated tokenizer of real-world assets. So we would buy real-world assets and sell them to customers. Those customers can then decide to keep those tokenized real-world assets or use them in DeFi. And they can use this in our protocol or in other protocols. But then, like, we understand that there's not really a silver bullet. You have to, if you want to grow the space, you need to play both sides. We decided to play both sides. We also have partners on the centralized world, partners on the decentralized world, but we see ourselves as a bridge. So what we're solving as a problem is a matter of accessibility first. Like some of the real world assets that we tokenize are easier to buy via us than via banks or brokers. And on the other side, we solve the problem of, I would say, the fungibility of the real world assets, like making it a little bit easier to move around, transact, and secure, because from the moment you bought it from us, you can secure it your own way. And we're strong believers than the guy like Ledger or like BitGo and all those custodians have done a very good job at helping you secure your assets in a way that could be seen as better than banks. Because again, they don't necessarily need to know who you are to help you secure your assets, following the same motto. It's about what you own, not who you are.
Thank you.
And if you buy from us, then you can use their stuff. And what we solve is, again, just enabling you to secure your assets the way you want, not the way you have to.
Rudy, you mentioned about the time, if you're moving fast enough. And I will say it really depends on perspective, because if you come to think that 23 years ago, we're not doing online banking even. So if we think of that, we are moving fast. But if we think of how fast we want to move, we'll have to understand that consumers are always ahead of companies, and companies are always ahead of government. So the government, in some cases, is not moving at the speed that we want. And the benefit of all of this is power to the people, the opportunity to economically empower people that has less access, brings alongside with the benefit that all this ecosystem is offering. The opportunity to transact without hassle is also part of the benefit. Access to capital and access to investment opportunities. So we believe that this is a very interesting timing to be with, but I'll have to second also Claude here and say that it's the merge and the conversions between different systems that make this system work and viable, because we have seen enough in murky businesses related to crypto. Many people got burned. So we don't want to see much of that under the name or on the flag of anonymity or this full decentralization. We need to have a context that allows for protection also of the investors, but also makes things seamless and efficient. So I'll say, like, not so bold, but not with 7 hair wigs or anything like that. I don't know how to translate that, so it's just to be like in between.
Yeah, thank you. And then you mentioned investment and you mentioned funding. This is very important. And then we spoke earlier on about also the topic of women and funding, because that's kind of very interesting. Now, our second part is about really the obstacles. How can we eliminate those obstacles? We know there's a lot of obstacles happening in this space, so it's not easy. But would love to hear how can those primary obstacles that are preventing the wider adoption of DeFi and the whole space, what strategies and technologies are being deployed and developed to really address those problems, like scalability, liquidity, security, and possibly the funding and many other challenges that they are. What's your take?
I start, and I give only one, because I'm sure we all think about the same. But I think the most striking one for me is all UX, UI, so user experience, which is awful. So right now, if you're not like tech savvy, financially savvy, very difficult to access to DeFi, what you call a DeFi protocol, so all the services which are offered. So for me, that's what lacks in terms of adoption for let's say, retail users.
Thank you.
I'd like to interject.
No,
please have
it's a firm no this time.
It's ladies' turn.
It's because
You have a great UX UI?
because I have a reply to him, just based on what he said. Unless you would like to reply to him.
Go ahead and then...
Okay, sorry about that. But this experience that you mentioned as being very difficult is, in my opinion, like kind of a scapegoat that the industry has been using as an excuse to why everything is slow. Like people have been like trying to say, but we're building software, but the interface sucks, which is why nobody is coming. And on the other hand, I mean, I have to say that I don't think this is only the interface. I mean, the interface is definitely the part of the problem. But in my opinion, it is mostly that a lot of people in the space are not really looking at which problems they could solve for users. They're looking at which problem they could solve for investors. And they're trying to see, okay, what is being funded? Okay, let me build something there and then grow. So nobody is really trying to solve problems for users. And in terms of interface, actually, if you look at, I mean, you've been in banking, so you were in banking as well. Do you really think that the interface of software in banking is that much better than what we have in crypto?
Give just a counter example out of the audience. Who owns crypto or have a wallet in the audience? Okay,
4,
so
5,
not
6,
too many hands.
7.
Among those people, who already try a decentralized finance protocol?
Do what?
3.
Who try
4.
DeFi?
Yeah.
But you see, but that's also one of the reasons why.
For sure, but it's, I mean, this is also a good point. DeFi, today, most of the DeFi software is not really comparable to what we're using in traditional, like retail banking. It's clearly more akin to what you use as a professional inside of a bank. Like it's like those, like lending protocols that are very complex, those aggregators, those, like most of those, the software built in crypto is actually pretty advanced financial software. And when you look at the comparable, I mean, open a Bloomberg terminal and then you lose everyone, right?
Yeah, Claude, but it defeats the purpose, because if you're doing this to democratize access, to give the power to people, why you make something that it can only be used by engineers?
Oh, again,
it's just like
I understand.
The technology used to be the most important thing, and it's still a very important part, but user experience makes people stick and not go away. I tried to open an account in CoinDesk, and I almost went crazy. Like, I couldn't even access customer support for 3 months. So believe me that as an investor and as a user,
I think that's a general issue.
Yeah, it's an equally important issue to solve a problem, to solve a business problem with solid technology, security as well, and usability in mind. Because if people cannot use it, they are not going to embrace it. It's not for experts.
I agree. And so I will break this thing into 2 parts. Because first there is B2C, there is B2B, and what we're seeing now is an industry that caters to B2B. What a lot of people are hoping is that the industry caters to B2C. And I think those things can be solved in parallel. There are apps, I mean, if you try to open an account on the app called Swissborg, it's so easy that I send my grandmother there. Like literally, my grandma is using Swissborg and receiving like funds from me there, and she can use it. Some people in the industry are focused on that, and not all of them are bad, I think. Like they're not as bad as people make it. But on the B2B side, I think we're doing pretty good. And I agree that making better interface for everyone would be great, but you can't solve everybody's problem in every company. Like when you see guys like Aave, it's kind of obvious that they're not trying to solve a problem for
It's about
retail.
good taste, because why do you think that B2B people do not deserve to have a good user experience?
They do. But what I mean is that it's already much better than what was there before. So it's an incremental progress. Again, like I've been using finance professional apps before, and it's utter disaster. When I look at how Aave looks like in comparison, I'm like, whoa, that's quite a step. And can we do better? Absolutely. Is it not better than what we had before? No, it is better. That's what I mean. We're already doing progress, but we can do better.
Thank you. Amalia, I know you have a different possibility.
To come back to the question, the problem of obviously entrance, problem of security, scalability, and sourcing liquidity. So obviously we see, especially in the bear market, a lot of DeFi protocols coming up with an alternative front end to their dry current front end, which is basically only accessible to someone who's crypto native, right? Let's forget about CeFi for a moment. Let's focus on the DeFi, right? So they're trying to come up with self-custody solution that will be a little bit more secure than just using a regular MetaMask or any other wallet connection. So they're already working on that, and basically, it just happened because of the bear market. During the bull market, they were all focusing on making the money and being first. And I was one of those people, so, you know, my bad too. Secondarily, you know, about the security in DeFi, I think it's very important to touch upon prevention of MEV bots. MEV bots are programs that basically scatter the blockchain to see if there is any transaction in the queue before it gets processed. That has a very interesting DeFi strategy to make money. And that's usually a software that obviously doesn't come from the same person or entity that has deployed this, as is waiting for the queue for the transaction to be processed, to be accepted. And then this software just picks it up and takes the money from someone who actually wants to make profit out of someone else's idea, someone else's analysis, and basically front runs them. They push by paying a higher gas fee or by cooperating with some of the validators. That unfortunately happens very often, and they're quite strong. Some of those bots are public, some of those are private, so we cannot even see them go through. They just basically, so to say, kick out the transaction that was designed by someone who was working for a long time on the strategy. So they get front run. Their transaction gets reversed. They're losing the gas fee. They never deployed the money. They're not doing it, right? Or they're doing it, but they're getting much less of a profit. So I think it's important to look into current compliant ZK solutions. We can look at what Polygon has already deployed. They're quite known. We can look at Aleo. We can look at Aztec. These are the projects that have received one of the biggest funding in ZK DeFi. And I'm definitely personally looking forward to see how they will solve those problems in terms of privacy. Obviously, that's all with selective disclosure for the regulatory reasons. But definitely, I see a lot of unfairness nowadays in DeFi for someone who's even a professional, an asset manager who works hard and a long time to deploy his strategy, and he gets basically kicked out of the queue, and they say no. And someone actually else makes money out of his own strategy. So I think these are the two most important things that we shall focus on.
I'm going to be talking about regulatory in a few. Gourav, what's your take?
Scalability should be the problem, but I think it's a problem of the small projects of a Defi. But as another part of our security and privacy, I think the second layer of a blockchain should be the solution of that. And of course, use and risk should be the key to move forward to the profitable journey, if you have to be handled the security and use and risk management, you should be have to taken up that.
Yeah, thanks. You know, we cannot run away from regulation, and then we are, I think, blessed in Dubai to have somehow, from the world, one of the few cities that has regulation in this space, and then we do need them more and more, of course. But how can we get those regulatory bodies and governments to really respond in a faster way to support DeFi now? And then what are those potential benefits and challenges integrating the DeFi into those existing regulatories, knowing that sometimes there's clashes in between, and then you mentioned some also, Claude, on those aspects. So I'll start with you from that side now, and then.
Well, first, big kudos to Bara here for setting up a very easy to understand and comprehensive framework for regulation. I think that one big responsibility that as an industry we all have, entrepreneurs, investors, the financial sector and regulators, is to work together and educating each other about the industry. Many times we assume that the people that will make the regulations and the law are extremely familiar to what we are doing, and what we are doing is quite new. So we miss out on providing the resources, the information, and what they need to better understand why what we're doing is important. And on the other hand, we'll see that there are some countries that has been completely averse, and they are not opening up the dialogue. Some others that are quite proactive, and they are using this as a competitive advantage because the blockchain train has left the station. There is no way this is going to come back. If any, it's going to get bigger. The crypto industry in particular, and the asset-backed cryptos and the tokenization of real estate asset is like the next wave, and the wave that we believe is going to be solid and going to grow exponentially, as well with BlackRock and institutionals getting into the massification of crypto and the industry. And other markets that are still, like in the case of the US, like building. But even in the case of the US, and I know because we took a frontal approach to regulation, perhaps it helps that my background is in public affairs, we don't see regulation as the Godzilla that it's going to take us all out of business. We understand regulation is a breaker or maker, and we need to live with that, and we need to see that it can benefit not only the investors and the entrepreneur if it's properly done. So my take on this is we should approach each other. We should work together, banks, financial institutions from the traditional world that hadn't changed since the Medicis, entrepreneurs, innovators, and regulators to build and co-build a framework that will help to accelerate the industry and turn markets into markets of opportunities, and not just trying to cover the eye with the sun with one finger just because we don't understand it. So I think
one of the main concerns of the regulators is the investor protection. And in fact, the regulator is not regulating the tech, he's regulating the use case, the application of the tech. So by that, they need to be involved to see more and more use cases to help them to just to frame it. So other regulators are a bit more advanced, they already have a license model in place, especially if you start to touch upon like financial services. And or others have even sandbox, so you can actually, for entrepreneurs who are among the here in the room, you can work alongside with them, you can explain what you do, and they can also give you like a lighter regulatory framework for you to launch your product. So there is like different things which are there, and again, it's just it's pure innovation. So DeFi is ahead. So you need regulators need some time to really understand to which extent all like entrepreneurs are developing such solutions.
I would say that, I mean, it's a problem that we could look from many dimensions. Like the first is that, I mean, to go back to the actual question, again, that was like, how can we work with regulators so they can like understand DeFi and help us with like, this Is there a fire alarm? Are we good?
It's break time.
No, so can we work with regulators to help them let DeFi in, kind of? I mean, in my opinion, there's one thing that regulators are doing about DeFi, which is kind of letting us play. And as long as they're not forbidding it, they're kind of helping. Like it is like doing nothing. It's sometimes a move. And in the specific case of DeFi and regulation, just not regulating DeFi could be seen as, you know, a form of a laissez-faire that is helping the industry. On the other hand, one other dimension that we can think about is that in the absence of regulation, you have a limitation of capital movement because you have some industries that can only move into regulated space. So by not regulating, well, you let the space grow, you see what's going on, but on the other hand, you prevent some of the capital from going in. And a way that can work is to actually build things that make sense. From that perspective, discuss with regulators. I mean, I had many licenses in the past, somewhat experience with talking with regulators. We even, I mean, in the end, hired the person who was the head of the regulator of the country where we're regulated. So we have a good experience in communicating with regulators because we had many licenses and we still do. But I mean, one thing that helped me a lot with that is that we started by hiring a person that had dealt with regulators in terrible conditions. The guy was working at Lehman Brothers after the crash, like right after the crash. So I took a guy like that and said, come work with me and help me with regulators who don't want to, like, you know, help me talk with people who don't want to hear about me. And he took the job. And then this guy was my chief compliance officer in the previous company. From there, I understood one thing. Like, as you said earlier, regulators very often care about investor protection. They're mandated bodies, like, they're people. They're made of people, and they have rules to follow, and they have a mandate. From the moment you kind of step in their shoes, you understand what they're looking for, and you can have a dialogue. It's not necessarily true for every form of regulator. Sometimes the politics, managing the regulators, are somewhat removed from the industry needs. But very often, you can kind of apply a thought framework that is, well, those guys have a job. They're trying to protect X and Y. I will have to show them that I protect their X's and their Y's, and that whatever I'm trying to build could be covered by whatever they're building. And then you can work with them on building frameworks. We've been part of many consultations. They're actually listening. Like when you have something in the middle of a regulation that does not make sense, it is not a door that is closed. It is very often something like, well, look, if you did this, you would enable so much more business in a safe way. And very often they're listening. The MAS was listening when he told them about their KYC thing. The Philippines, the same. Like, we work with regulators in many countries, and I think this is an approach that, I mean, I second you when you say that we should actually work together, because, well, this is what they've been doing in the financial industry. We can repeat the same steps.
I think it's very important working together on this. And
yeah, absolutely.
Thank you. Amalia.
I also agree, and I see a lot of jurisdictions that rather would prefer to start from processes of regulation of centralized products on blockchain rather than permissionless blockchains, especially if it comes to the new layer 1s, layer 2s, when they hear suddenly, hey, okay, someone can come in, deploy his own token on your layer, but how do you permission him to that? How do you run the due diligence on him? Well, you don't. So what then? Yeah, we don't know. We're going in circles. But what some of the jurisdictions doesn't really understand is that actually blockchain could be, obviously to us, used for monitoring, right? But if you're trying to create a process to regulate decentralized blockchains, layer 1s, layer 0s, layer 2s, I think it's very important to learn all of the monitoring tools, all of the monitoring bots. You can develop your own as a government, right? So let's start from differentiating the sandboxes in between centralized products on blockchain and decentralized products, because they're obviously very different, and regulatory tends to try to treat them in the same way. But obviously here we are extremely fortunate to have a very, very boutique approach in every single jurisdiction. So we're very thankful for that. But then I do believe that every single jurisdiction that is now open to Web3 and crypto should consider that and take some advice from UAE as well.
Thank you.
What does help as well is the fact more and more people from TradeFi, from the traditional finance, goes into DeFi. So in a way, become more and more professional. So if you have interaction with the regulators, you also speak the same language. You're more sensitive to different type of risk, because we're talking about smart contract risk, but it's also literally like a financial risk, what you put in your smart contract as well. So having this dialogue, I think is give and take, but also they can learn as well and see people know what they're doing, basically. So they feel more comfortable to give that freedom of a sandbox as well.
Thank you. Gourav, last word, because I want to try to manage the time. I want to try to take some answers, some questions. I'm trying.
So we are really heard about that the big players or the economic handlers, big game changers were already adopting the Defi. So I think Defi is not only the profitable to the crypto crypto lovers or trading lovers or who want to invest in crypto. I think Defi was the solution of the all economy to the countries or to the state or any other particular financial opportunities. So I think they was taking the major step to all the financial institution to make a profitable journey with the Defi or make the discussion day by day, because when the problems goes up, of course the solution was come out. So I think it should be the great value come in a future if we are going with the Defi or financial institution. The big the Miss was saying about the BlackRock. BlackRock is the biggest financial player. So I'm also heard about the news of ETFs also. So it should be the positive sign to the Defi, or I think after some months or years, it should be the more scalable or flexible to the users, and Defi should be the main objective to make the independent financial freedom.
Thank you, Gourav. We wanted to talk about also some risks and the inclusion part, which are very important, but unfortunately, due to the time, we will not. But I want from you, before I take questions, 2 words, quickly. If there's a regulator in this space, what is your message to him? What is the message to the regulator? What do you need from them to allow DeFi and then grow the CeFi all together? 2 words, quickly.
Work together.
Work together.
Due diligence.
Due diligence.
Give proper solution to the market.
Okay, thank you.
Financial inclusion.
Financial inclusion.
Understand how to monitor permissionless blockchains.
That was more than 2 words.
Thank you. If there's any questions, please,
I had
the microphone.
credits from before. So.
Microphone to, we have 1, 2, all right. So far 2. We can take them. Please, for the question, ask the question, not the story, so that we can gain some more time, if you don't mind. Microphone, please.
Can we get a microphone for the questions, please?
Hello? Okay.
Hi, guys. There's a question on CBDC. I mean, the biggest barrier that we are facing today is, number 1, privacy, and number 2, mass adoption. And that seems to be a concern of infrastructure being available. So what are your thoughts on CBDC's privacy and mass adoption areas? Any of you?
Thank you.
This question.
Anybody would like to take this?
I think it's the most controversial topic, as indeed CBDCs are, bringing the adoption, but at the same time are bringing a lot of transparency, and some of the old kind of businesses not necessarily go through strict, proper ruling, so to say, and so a lot of businesses that have interests most of the interest in businesses in certain countries won't be as happy to get CBDCs released. At the same time, enterprises and private clients for the bank accounts, they wouldn't be as happy for everybody to be seeing how they're transacting. So instead of a central bank, anybody else could possibly see this, and so they would feel controlled. So I think coming back to ZK and DeFi, I think we can focus on collaboration of CBDCs and the biggest ZK layers in the space. I think that would be great.
Thank you. Quick question so that we can conclude, if you don't mind, on the right-hand side here. Thank you.
Yeah, good noon, everybody. My name is Raj. I'm from India. I've been hearing this discussion quite patiently, and I'm thankful to all the panelists that this session was remarkable and informative. That is one. My question is, now we have been focusing on DeFi and now trying to compare it with the centralized system, financial system. Now, does it hold the power to replace the entire banking system? That is, my first question is this. Now, the second question would be, after gaining the answer of this question, like, does it really hold the power to completely discard the banking system?
Excuse me, do you mind repeating the first question?
Yeah, this is my first question. Does
the DeFi will eliminate the banking system?
Yes.
Okay. Well, okay, I can take that.
Or the centralized?
No, I mean, at least the way DeFi is being built right now is not necessarily built in a way to replace the banking system. Like, it's even, I mean, it could be seen as a replication of the banking system for different types of assets. Like most of what's happening in DeFi would just not happen in the banking system. It's similar system that could be used for playing with different type of assets. It's when you see it, it actually opens door to new use cases. Like you could have game tokens being used as a leverage and stuff like that. So, which is something you don't really think about in a financial system. So it's more about like making your money as a usable bit of software and then like making it integrable with the rest of the software industry that is in this vertical. So it's not necessarily a replacement per se. And I don't think a lot of DeFi founders are really moving forward to try to replace the financial system. Now, if we try to push things to the extreme, could it replace a financial system? I mean, well, you know, as long as you have a Turing-complete machine somewhere, yes, you could. Would it make a lot of sense? I'm not sure, because if you were to replace the entire financial system with DeFi, you would have to replace pretty much everything in terms of policy making everywhere, because the financial system is somewhat you know, resulting from policies of different companies. Like you can or cannot do this in this country because the local government said so, and therefore the banks apply this type of regime. And if you were to replicate this on DeFi, well, that would not really be DeFi anymore. If you were to apply the same set of rules, that would just be digital finance. But it would not be DeFi. It will be like another part of CeFi. So I don't think it would and it will, unless we're talking about a really cataclysmic event. So we're looking, in my opinion, we're looking more at like towards a way where multiple ways to move money cohabit. And in some cases, it will be way more convenient to use DeFi. In some cases, it won't be. And that's, I mean, at least this is where we're going. Now, can it change? Yes. Maybe this is not the way it will be. Maybe it will end up absolutely replacing everything. It is absolutely not impossible.
Thank you.
It's just unlikely.
Thank you, Claude. Sorry, but for the time, I will end with this controversial quote by Bill Gates. We don't need banking. We don't need banks. We need banking. So I think now with more DeFi products coming on, we will still need banks somewhere along the line, but going forward, we need the transactions and how it goes. With that, I'd like to thank you all, and then one round of applause, please. Thank you for joining.